Everyone, my name is Lorenzo, and my goal is to interview professionals across every major career path in real estate so students can make more informed career decisions. One of the biggest challenges for students and young professionals is understanding what different careers actually look like day to day. Job titles sound interesting, but it's often difficult to know what the work actually involves until you hear directly from someone doing it themselves. That's why today I'm joined with Andrew Germain, a commercial mortgage underwriting analyst. Andrew works on evaluating commercial real estate financing opportunities, analyzing properties and borrowers, assessing risk, and helping lenders make informed lending decisions. We'll be talking about what he does, how to get started, what a typical day looks like, the skills needed to succeed, the pay, career progressions, and advice for anyone interested in commercial real estate finance. Thanks for joining me today, Andrew.
Oh, really great to be here, Lorenzo. Thank you for inviting me.
Awesome. Well, to start off, can you briefly introduce yourself and tell us a little bit about your background?
Yeah, absolutely. So I have been in commercial real estate now for 3 years. I graduated from the University of Calgary in 2024, but I've been working in commercial real estate since 2023. And before that, I was also doing jobs in real estate as well, working as a bookkeeper. So I've been inside of the commercial real estate space pretty much since I turned 18.
Awesome. Okay. And what types of commercial real estate properties do you typically work on?
I've kind of niched myself into here is CMHC specific underwriting. And so because of that, a lot of pretty much the entirety of my underwriting experience is in multifamily underwriting with some retail built in there as well.
All right. Okay. Now I know a lot of people are wondering, what does a commercial mortgage underwriting analyst actually do during a transaction?
There's a lot of things that an analyst will do during the transaction. Job is to gather in documents and to synthesize information down from what a broker or what a borrower has sent to us and be able to disseminate that into CMHC. So that's the first step of really what I'm doing. So making sure that the loan makes sense, values of properties make sense, net worths of individuals make sense. From there, I'll work with CMHC to make sure that there's no hiccups, act as a liaison as well if there's a broker involved, if there's any questions from CMHC. And then I move forward to working through credit approval.
Okay. So how do you determine whether a loan should be approved or declined?
You don't really, as an analyst, determine whether or not a loan should be approved or not. Ultimately, that comes down to a lender's credit department. Where, however, we come in is we try to structure loans in order to make them work. So if I had a loan come in as a broker or as a lender that was maybe on the edge, where then I would go from there would be to see how we can get credit to be on site. So whether that's adding guarantees, adding additional security. So really, we don't want to say no to a loan unless there are very obvious flaws that are going to make it a not redeemable loan.
It's really interesting. In my head, I don't know. I just picture
Yeah.
someone with all the statements and documents, and it's either an approve or a decline. But
Yeah.
no, you're always trying to make it an approval, and you're trying to add conditions to get that loan approved. And unless something fundamentally is wrong and it can't be done, then it's declined. But the goal of your work is to try and get those approvals working, and you're really working together. Okay, well, that's
Exactly. Well,
great.
I'll give you an example, if
Yeah.
I may. So, one example of a loan that, or two examples of a loan that I would probably say no to or probably would decline. One is going to be heavy environmental contamination.
Hmm.
There's remediation efforts that can be taken, but for a lender, those are very risky to take on, especially if there's potential future health impacts down the line. And so those can be extremely risky for lenders to take on because of lawsuits as the loan progresses and as the loan ages. That's something that an analyst level, it might get to an analyst. And if we find it, then we'll decline it. But generally, that's stopped before it even gets to us.
Hmm.
Another example could be you have a loan that is just outside of our lending parameters. So when it came into the company, they maybe wanted a construction loan for X amount of dollars, call it $10
Okay.
million. But after discussing with a broker or discussion with the client, they want to bring it down to say $1 or $2 million for whatever reason. They won the lottery or something. And once it kind of gets to those places where it falls outside of our credit approval zones, that's when we'll start to say no. But generally, as an analyst, you have deals pre-filtered for you by a business development person, a salesperson who takes the first blush at the deal and says yay or nay. And then they come to us. And if we find something very obviously or very, very concerning, at that point we'll raise it. But generally, once it's made it through the salesperson, we want to try and get that deal through and approved.
Interesting. Okay, so it was two big takeaways for me there. So, firstly, things are filtered before they're getting to you. I didn't know that. So, someone's already going through, taking out the obvious no's, and then what you have for the most part is generally considerable. Okay. Then the other thing was that you typically will have like an ideal job where you're looking for a deal of a certain size range between X and X dollars. And that is typically for a certain type. It fits construction. So, it's good that you guys specialize in it because then you'll know exactly, okay, well, is this risky? Well, we would know because we've done so many of this exact type of deal. Okay. I learned that now. That's awesome. We'll transition to the day-to-day realities part. So I'm curious, what does a typical day-to-day look like for
A lot of my day-to-days are mainly getting in the morning, catching up on what I missed from the previous day, and then going through and talking with brokers, talking with CMHC, and doing analyses for our loans that either haven't gone into CMHC yet or are about to go into credit. It's primarily doing a lot of analysis, looking online for rental comps, parsing through appraisals, these sorts of items to be able to analyze deals. So it can, but because I'm looking at so many different deals in a day, it really keeps it engaging.
Okay. Now, I'm curious, what skills do people think are important for your role, but actually aren't?
The skills that I've honestly found that people think that they need or need to be highly, highly adept at, but aren't really needed, there's financial modeling. When you're coming into the real estate space, most people think, oh, I need to be a whiz at financial model. It's not necessary to have those coming into the industry. It's good, and you need a basic level of understanding. But I'll tell you right now, I did not major in finance. Really, it's just having that baseline understanding of what is the loan to value? How do you calculate debt service? How do you calculate the primary ratios, which are pretty easy to get your head around once you've been in the industry
Yeah.
for a month or two.
Interesting. Okay. Yeah. I kind of had one of the similar misconceptions where I was thinking, really strong financial modeling on Excel and that you got to come into one of these roles as an analyst with tons of experience and practice with that. But it's, fundamental ratios that you pick up pretty quick.
Major formula. Like if you're coming in, you only need to know how to calculate, really know how to calculate is your payment formula. But even then, if you're coming into a firm that has been around for any longer than probably 1 month, I'll say, there's going to be an Excel sheet somewhere that has the formula pre-calculated for you. So even if you don't know it, go and scavenge. You can find it. It's not the end of the world if you don't know it.
True. Very true. Yes. Okay, so those are the skills that you think might be a little overrated or there's a misconception about. Now, on the flip side, what are some skills that you think are absolutely crucial for success?
That are crucial for success are organization and time management. I find that in the commercial real estate space, you're very busy all the time. I started a new role about a month and a week ago now. And within about 2 weeks, I was starting to work on, I was pretty much up to speed with where the rest of the team was in terms of deal flow. And so being able to have strong time management is extremely important. So that way you're not spending too much time on a deal. And I really wanted to emphasize too that there are perfectionists out there. I'm not one of them, but there are perfectionists who will take a look at something and say, I need to make this absolutely perfect. And you have your diminishing returns, spending more
Hmm.
and more time just to fix really small items. And so that part of that time management is understanding, one, how long can I dedicate to this one item before I have to say, this is good, I can submit this. And two, it's saying, I need to communicate these timelines to clients. How am I going to be able to meet these timelines as part of this time? And the other item that I really think is super important, like I said, is organization. I myself am very scatterbrained. I tend to jump around to a lot of different things. And so what I do to help me is I have a task list always set to my side, so I know exactly what I'm working on, where I'm going to be working on it. So that way, as long as you have some form of organization, whether it's in your mind or you have it on a computer, like it's paramount to have that. Otherwise, you are going to forget about deals you're doing. You're going to forget about minutia details, and it's going to be extremely difficult to catch back up, and you'll make mistakes.
Right. Yeah, I can definitely see how that would be useful in your role. But I could also see that applying to all sorts of other analyst positions where, it's very
Exactly.
common. I know a lot of perfectionists where every little small detail, and like you were saying, it's diminishing returns. You're getting a smaller and smaller payoff. And when you have client timelines that you need to be meeting, I can see that applying to every analyst position. So I think that's really valuable. Now, I'm sure a lot of people are really curious about how to get started, how to get into your shoes. So we can switch over a little more to that. So, how did you first get into commercial real estate finance?
I walked into an internship position. It was a last minute call at my previous firm that I worked at. They brought me in for the interview. They liked me, and I was able to get off the ground and running there. But what I've seen is my case is quite rare. From the different people that I've talked to in industry, a lot of what I'm seeing are people are applying for internships. So if you have an internship at a firm, being able to move into full time is fantastic, but getting into that internship position is very challenging. And
Mhm.
so really the best way to break in, and I think this is something that a lot of students are going to hear, especially if they're in business courses, is go out and network. You don't have to network with the CEO, the chief broker of a particular company. You can go out and network with analysts and say, hey, I am interested in becoming an analyst. Who could I talk to, to get more information? What could I do to get more information down the line? That's would be my best advice, because especially with internships, there are so many students competing for roles that it really makes it challenging to be able to get find yourself as the one student who makes it into the internship position.
Yeah, no, and it's so true. The importance everyone's hearing, you need to be networking, 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 and it is so true. But I know that, so many students, they're intimidated where it's, you have senior roles and you're going and approaching them and, they might have little time or they might give you less attention and it can be a little intimidating, but it's so true. You can talk to anyone. You can talk to the person who's in the role you want to. You want to be an analyst? Go find a bunch of analysts, go talk to them. And, it really seems so scary, but it's really not. Like, you're on the
No,
other end. Like I first met you from a cold message on LinkedIn
yeah.
and we had our coffee chat. Like from your perspective, from the one being kind of networked to in a way, like do you see them as annoying? Do you see these people as a big bother and that you just can't wait to like stop talking to them? Like what's your perspective when someone comes up to you?
If I didn't want to talk to someone, I just wouldn't reply to the message. But
Yeah.
in all honesty, I really love sharing more about what I do. I'm very passionate about real estate. I'm very passionate about more people getting into real estate, and helping people get into real estate. It's something that I really love. But I'll say this as a very broad stroke comment. People love talking about themselves,
Mhm.
especially I'm in most industries. And so if that helps to break any ice, if you're a student who's watching this looking to get out into a coffee chat role, people love talking about themselves. It's very much a little bit like I had a coworker one time say it's like a date. Ask them
Yeah.
questions.
Yeah.
Don't talk too much about yourself. Just ask them questions. Let them talk about themselves. One thing I've seen for someone who had his second or his third coffee chat with me, he made a remark to me. He was like, people are so much nicer than I thought they would be
Yeah.
when I started
It's
doing
so
coffee
true.
chat.
Yeah.
And it's that's exactly what it is. Like, we're not, if you're coming to us for a coffee chat, there's really two ways that I can see a message going. Is one, the person will say yes, and you're gonna get a coffee chat, and you're gonna have a chance to talk with someone in industry, and you're gonna get to learn a lot of information. Or two, they're gonna read your message and tell you no. And either way, well, there's only one good option there, but if they say no, you're no worse off than where you were before, right?
Completely agree.
So,
You're in the same like you're definitely not
yeah,
worse off. And it's happened to me a million times where, I'd
exactly.
just go message some real estate developers and I would hear back from some and I wouldn't hear back from some. And in my head, I'm like, oh, okay, like they didn't want to talk. They messaged me a week later, 3 weeks later. I had a message like 2 months later. And it was just that they were really busy in the moment when they saw my message and they forgot about it. And then, sometimes I'll send a second message, sometimes I don't, but they get back to me way later and it's not that even they're not interested, it's just they're doing something and they message back to you eventually, a whole bunch of them. So
Yeah,
just because they don't respond to you in the first day or two Definitely don't think that that was just a waste and that nothing will come from that. Now, and a very important part of every role, I know a lot of people are always wondering about how the pay works. So, for your role, how does the compensation structure typically work in commercial mortgage underwriting?
You get paid a salary, and then you have two tiers of bonus. So typically, you can see either a fixed percentage bonus with, say, how you worked, how the company performed, how you performed, being one way to get your bonus. And then the other way would be just how you and your pod or you and your group of people that you worked with, how you did with deals over the quarter, over the year, over the half year, whatever the period may be. And so, whatever extra bonus money there is split between the analysts, the associates, the business development people.
And so, largely fixed salaries, and then you have
Yeah.
your bonuses. All right.
Yeah.
Now, in terms of specific numbers, what can someone realistically expect to earn in year one, let's say year 3 to 5, and year 10 plus?
I think that really it all depends on your firm. So when I started out
Mhm.
as an intern, I was making, call it, $25 an hour because I was working as an hourly employee at the time. And so once I moved into a full-time position, the salary band is generally somewhere between, I think it was 60,000 and about 80,000.
Mhm.
So depending on the level of experience that you have, your schooling, how much you impress the people in your interview, you'll land generally somewhere in that band. 4 or 5 is when you make the split out of the analyst track and you start to
Mhm.
take one of two major paths. So you can go down the sales path where you're starting to work as a business development person. You're going out and you're getting deals, and your pay becomes a lot more compensation based. Based on what deals you're bringing in. Or you can go into a more manager position where you have a higher fixed salary, but you don't have the unlimited upside that you would as a salesperson. So when you're in year 3 to 5, if you're making, 100 to $120,000 a year as base salary, that's something that is, really acceptable and probably where you would be. And then by the time you hit year 10, depending on which side of the road you
Yeah.
choose to be on, you could be making over $1 million a year. Again, that's in the rare cases, right? But if you're a salesperson, and then your salespeople could also be making 60,000, $50,000 a year. So there's a massive band on that side. And then on the other side, once you're a manager, if you're 10 years in, you've been a manager for 3 or 4 years, you're probably looking at somewhere between, I'd say 150 and 200,000 would probably be, depending on the size of your firm as well. Real estate is not a get rich quick. This is one of those
Yeah.
things you have to work very hard. If you're working at a smaller shop, you're likely going to see the lower end of that. So maybe 130 to 150,000 as a manager.
Yeah, like it'll depend on your personality. If you're more that kind of go-getter, extroverted personality type, then yes, go try the sales and earn as much as you possibly can. And if you
Yeah.
prefer that stability and knowing exactly how much is coming in, well, 150 to 200K, you're definitely going to be earning some pretty awesome salaries. So good to
Yeah.
see that that progression really, really amounts to something there. Of course, this comes with some challenges as well. Now, I'm curious for your job, what do you find the hardest part of in your day-to-day work?
The hardest part of the job that I've really found is having to work through and being able to synthesize down information from one source to another. So, say if you're getting information from CMHC, CMHC will give you some technical explanation. You send that to a broker, and the broker, maybe you have to explain it to them in layman's terms, or the broker will send you a package that is a little bit basic. You have to take that and be able to digest it and then turn it into something that is, comprehensible for credit to look at. So, something more
Hmm.
technical. And it's a challenging and it's a hard part of the job, but that being said, it's still a part that I really enjoy doing, and it's
Yeah.
it's a skill that I think I've developed very well over the last 3 years.
Yeah, and I think it's super important to differentiate. There is a big difference between hard and bad part of a job. Like this is
Yeah,
like just because something is hard doesn't mean that it can't be really enjoyable at the same time, just that it's going to take extra effort.
and that's honestly what makes part of this job so rewarding. I find that for myself is I do like to be challenged by these deals. It's something that's just so fulfilling for me.
Yeah, and you feel so accomplished at the end of a deal. Like you really feel like you worked hard and it means
Exactly.
more at that point. Yes, totally.
Mhm.
Now, as with kind of any analyst position, especially related to finance or real estate, it tends to get this rap of constantly sitting in spreadsheets. So, for your experience, do you find like how much of your time do you actually spend in Excel versus meetings and communicating and building relationships? What is that kind of Excel ratio?
Yeah, for myself, I've been very lucky. I know for some analysts, they do spend most of their time working in Excel, kind of doing just the very nitty gritty analysis work. If you're extroverted, you love being extroverted, companies will see that and they won't generally make you be exclusively an underwriter. In my past job and in this job too, I'd say I spend about 50% of my time just deep, like knees deep in spreadsheets, doing, analyses. I'll spend maybe another 10% of my time or 20% going through and actually writing through credit memos. But then again, you're an analyst, so that's part of the job. But then the other fraction of the time, I'm communicating with CMHC, I'm communicating with our internal teams, I'm communicating with brokers, with clients, and really being able to fulfill that extroverted part of me that I really want. And so when you're in a company, you do also have those choices to be able to say, how much do I really want to be talking, and how much do I want to be doing analyst work? Obviously, with any job, there's not going to be you are 100% an analyst. All of the data is going to be fed to you, and there's no job where it's going to be you are 100% talking to brokers and CMHC.
Yeah.
But depending on where you fall, like an analyst job is going to fall more on the obviously on the analysis spectrum, but you are able to, depending on how you are as a person, extroverted or introverted, you're able to kind of take the knob and adjust it a little bit, so that way you're able to go out and have at least some extroversion in your day.
I didn't know that was a thing. I thought it was kind of a set day to day. And obviously, this will depend firm on firm. It's not the same across the board, but people will notice what are your tendencies? Are you building really good relationships? Do you communicate really well? Do you kind of have that extroverted type? And can we tailor and play into that a little bit? Or if not, and you love, being in Excel and the spreadsheets, okay, then, let's prioritize this and make that enjoyable for you as much as we can. Now,
Exactly.
obviously, there's good days and there's bad days at work, but I'm curious what a bad day at work as a commercial mortgage analyst actually looks like. So, can you tell me a little bit, like what's a bad day for you look like?
I'm generally optimistic. I'm sure you can tell.
Yeah,
Like I love being optimistic,
yeah.
but there's a day about a month ago that happened, and it just took the wind out of my sails. And
Oh,
generally, it's when I'm getting a lot of issues coming back from a CMHC file that we thought would be a slam dunk,
mm,
or something that would be relatively easy. So if you're not aware of the CMHC process, what you do as a lender is you go in, you submit your file to CMHC. It's picked up by somebody called a coordinator who adjudicates the file to make sure that it has all the documents, and then it goes to an underwriter who then actually adjudicates the metrics of the loan and then issues your COI. Usually, because this process can take, depending on how busy CMHC is, from a few weeks to a few months, we want to make sure that our packages going in are going to be approved by CMHC. Sometimes, we'll know that there's going to be an edge case, so we can be prepared with answers that come up. But there'll be times when you're going into CMHC and there's an issue that they find that you weren't expecting. And then there's a lot of calling back and forth where, as a lender, you're acting somewhat as a middleman for CMHC, between brokers and the CMHC person themselves. And so it's a lot of calling back and forth from CMHC calling the broker then calls you, you call back CMHC, CMHC calls you. And so there's that puzzle solving aspect of it, which I like. But then there's also the surprise of, wait, we thought this was going to be not a problem. Now we have to go back through and we have to spend a lot more time on this than we had initially budgeted. And that's what takes the wind out of my sails. Not necessarily, yeah, like I said, the problem solving, but just having to devote that extra time and significant extra energy to try and get something over.
yeah. And then you're playing phone tag, and it's all about the
Yeah,
expectations where you're thinking for sure this is going through, and then all of a sudden there's an unexpected issue and that just complicates it or the deal dies. So that makes a lot of sense. Now, lastly, here on the subject, is there anything about the industry that you wish people knew before entering it?
You don't need to be an Excel whiz. You don't need to be a financial modeling whiz to get into the industry. So I don't know if that's something that stops a lot of students from wanting to come into the industry, but it's something that you don't need to have, and something I wish I had known a little bit earlier. But then the other thing is, everybody that I talk to in real estate is so passionate about what they do, especially in the higher up roles. You're not coming into work every day and working with somebody who is just there to make their money and go home. Almost everybody that I work with is excited about what they're doing, is passionate about what they're doing. And really, that's something that helps drive me every day. And it's something that I really think helps drive new entrants into the real estate space as well.
Now, commercial mortgage underwriting, this is a great industry. This is a great role. And I'm sure, there's lots of things that you love about your work. But if you were to nail it down to one thing, what is your favorite part of your job?
The tangibility of my output. What I love, and this has been my default answer anytime somebody asks me this, pretty much since I've started in the industry, is I can go down the block, or maybe not down my block, but I can, drive out to a site and I can see that I actively had a hand in making this building happen. I look out my window, in my condo right now, I can see there's a development right beside me that's been built. How cool would it be to say, like, I was the one that looked at that development? I did the analysis for that. And so the tangibility and being able to see the actual output of my efforts really it's my favorite part of the job. And that's what really gets me. That's what gets me out of bed, honestly, in the mornings, is being able to say and being able to go to work and say, I am going to help build something. I'm going to help transact something.
That it's so true. It's one of those positions where, like, it's more than just doing your job. When you think a little more holistically and you go for that walk and you see all these deals and you're like, I was involved in making this a reality. I was involved in making this a reality. And, my work and effort contributed into making this. So that's such a good point. Tangibility of it. That must be an awesome feeling. And afterwards you're showing your kids one day that building, this building, this building. I worked on so many deals over the years, and look how great they turned out. Awesome.
Exactly.
Now, what keeps you excited about commercial real estate finance?
The thing that keeps me the most excited about commercial real estate finance is the variation in every single deal. When you're
Mm.
working on deals, you can have two deals that are literally going to be the exact same end product. Maybe you're buying two sixplex townhomes from the same builder on lots that are literally right next to each other. And both lots can present, and both buyers can present very different concerns as you're going through the mortgage approval process. Maybe one lot's a little bit closer to a gas station, so it's identified as having potential contamination. You need to work through that. Maybe one borrower guarantor has had issues with their credit that they've since resolved. You have to work through that.
Yeah, everything is different. It's you can have side by side lots, and there's always something unique about every deal. So I can totally get the excitement behind that. Now, kind of talking about your favorite part of the job being the tangibility and seeing, the actual building and construction of these properties. What has your proudest deal or accomplishment been in your job?
My most proud deal that I've had is a deal I worked on out east. It was a $25 million construction building. It was my second year in the industry, and it was the first time I'd ever tackled a deal of that size. And the support that I got through it, but also getting to do the analysis, running through CMHC with it, was such an amazing experience. I learned so much valuable information from working with the larger borrower. And so getting to put together that large building was honestly one of my biggest accomplishments to date. That being said, as of right now, I'm working on loans that are about that size and larger. Which once they start to get funded, because I've done the analysis on those, I've really had to dissect. I've had to answer questions for credit. Those are gonna lapse this $25 $25 million building. But That's always going to be my first building that I financed construction. That was a big project with a complicated borrower. And so it has a special place in my heart.
Definitely should. Yes. Awesome. Now we're going to switch to the advice portion. Now, I know a lot of people watching this video are really trying to learn as much as possible because they're interested potentially in being a commercial mortgage analyst and they're trying to get into your shoes. So, if you were 20 years old again, let's say, and wanted to break into commercial real estate lending, how would you start?
Well, if I had to go back 5 years,
Yeah.
no, I kid. But one of the things, and I think this really lends well to what we talked about earlier, is again coffee chats.
Yes.
I have talked to a lot of people and throughout the industry, and a lot of jobs are really secured kind of through coffee chats. One of the things that I found really valuable, especially as an intern or someone where I would interview interns occasionally, was that we would have so many applications and internships. They get applied to by thousands of people. And there's only one spot that you can go that you can really get to. And so being able to, if you're 20 years old, you're in the middle of university, you want to start breaking into the role, apply for those internships and then go and have coffee chats at the company that you want to go work at. Put your name out there so that way you're not just Andrew Germain sitting in the pile of resumes that they received. You are Andrew Germain, the guy who went and had the coffee chat. You're Lorenzo who went and had the coffee chat. So that way you're at least standing out. I think that's really common advice. But I also think it's really undervalued by a lot of the student body, and I know I undervalued it as well. And so having hindsight now, that is absolutely something that students really need to do.
Yeah, it's really that combination both of applying to the internships because that's the goal is getting the internship. So applying for it, but you need to differentiate how you're going to stand out. And it's going to be really easy to stand out when you're talking to people that are decision making or you're talking to people that can introduce you to decision makers and all of that. So it's that combination. Now,
Yeah.
focusing on those internships and kind of what you see skills translating from, what internships would you recommend that students should target?
It really depends. The answer I feel is very lawyery. It always depends. Whether if you want to wind up in an analyst position and grow in that path, really the internship side of it can really be work at a mortgage brokerage firm, work at a lender as an intern if they have those positions available. Maybe work at, firms like CBRE. I don't know if they have internships positions off the
Yep.
top of my head, but work there as
Yep.
a summer intern. Or even do something that's tangentially related. If you're doing investment banking, if you're doing any other kind of analyst work or something where you're going out, you're being sociable, or you have to do analyst work as part of what you're doing, it's extremely important. Not necessarily when you're getting hired into a role, it's not very much necessary to have the exact direct experience to get into it. It's helpful, sure, but if you are a strong candidate and if you're someone who is passionate about the industry and you've had these coffee chats, you've shown that you've expressed interest, you don't need to have, an underwriting internship in order to get a role. One of the things, though, if I can tack onto this, that I think is just as important as internships is doing case competitions.
Yeah.
Why I think I did 3 or 4 case competitions while I was going through university. Most of them being real estate based case competitions. But not only do they, help you build out what is your modeling, how do you look at a real estate transaction, but it shows that you are already interested in doing that role. Like you've done this out of your own free will. You're not doing it because I need money for the summer. You're doing it because I want to prove myself. I want to push myself and do these things. And I think ultimately the internships are great and your case competitions are great as well. But if you can't get into an internship, go for case competitions. There's honestly just as much value there, I feel, as an internship.
I completely agree. And it was you that first told me go try some case competitions a week or two later after we spoke. I was in the real estate development case competition and we were learning exactly kind of what the day to day was. We were going through the law, we were going through the feasibility, we were going through the best use, we were building the pro formas, We were going through the design process, we were going through the city planning, the stakeholders. We presented it. I had the time of my life. I feel like I learned so much from it. What do you know? We ended up winning first place in it, and we got $1,000 to show for it. So it was an amazing experience, and I totally agree. Not only does that really set you up with the typically a company will be affiliated with the school, like us was TCU Development, so there's normally a connection there where it's pretty easy to speak to some people making decisions there, some hiring managers or some other employees there, and you have a great connection now. Or you can post about it on LinkedIn, and now other, for me, it could be other real estate development companies or it can be anything. They're going to see that as well. You start putting that on your resume, you put a LinkedIn post, you're talking with people from that company. That is such a great way to just differentiate yourself and as like a first step in the door for so many companies. So
Yeah,
yes, I agree.
amazing. And congratulations, may I just
Thank
say
you.
on winning first. One of the things that's really great too, when you talk about, companies sponsoring these events, these case competitions is, I've been brought in as a mentor for the case competition for the last 2 years at the University of Calgary. And so I get to work hands on with the students that are coming up with an idea. And I get to really have a deeper understanding of how these students are operating, how at what level they're operating at as well. And I've made recommendations to companies that I've worked for in the past, like, hey, this person is top notch. And so it's another one of those ways that, you're able to really get yourself exposure.
Absolutely. There's so many people that are involved in organizing these, and it's because they're excited and they want to hear all sorts of different ideas. And I know, like, they get excited when they hear, oh, okay, this idea, you know what? That's actually something I never thought about. And then they're thinking about you. So, a lot of people involved in those.
Exactly.
So, finally, who should become a commercial mortgage underwriting analyst and who absolutely should not?
Have the passion, those are the people that I really love to see entering into the real estate space. But if there's anyone that I would caution against, it's going to be people who take issues very, very, very personally. And I actually had this issue myself when I first entered the industry. And so even if you do, it's something you can learn out of as well. But took the file very, very personally, like, oh my gosh, what did I do? Not this file was doomed from the start. It was like, I should have done XYZ way better. As long as you're willing to be able to learn and put in the effort, if you're not willing to learn and put in the effort, I think this is the same with any job. Go find one that you're passionate about. Otherwise, try out real estate. It's a lot of fun.
Thank you so much for taking the time to share your experiences and insights today, Andrew.
Lorenzo, it's been my pleasure. And if anybody who's watching wants to connect and reach out to me on LinkedIn, I'm absolutely more than happy to have a virtual chat on Teams or Zoom if you're outside of Calgary. The link to my LinkedIn is going to be, I believe, in the description of this video. So, like I said, if you have any questions, please feel free to reach out. I'm always happy to make some time.
You heard it here. You now have the inside information on commercial mortgage underwriting. Thanks for watching, and I will see you in the next interview.